All right, so let's say you made 30,000 selling your 3D printed products last year. You might think you owe tax on all 30 grand. You don't. You owe tax on a lot less than you think because almost everything you spend to run this thing called a business, the government lets you subtract first. And most makers leave money on the table, but by the end of this video, you'll know exactly what to write off. Before we get into the basics, I just want to make a quick disclaimer before we dive in. I'm not an accountant and this isn't tax advice. Everything here is general information, so definitely run your specific situation by a professional before you actually file your taxes. Now, here's the whole concept in one sentence. You only get taxed on what's left after business expenses. Make $30,000, spend $10,000 running the business, you're taxed on $20,000. Whether you're filing the T2125 in Canada, a Schedule C in the US, or self-assessment in the UK, the underlying math is the absolute same. With that out of the way, let's talk about what you can actually deduct. The first thing we'll start to talk about is your printer. Your biggest investment for your business is actually your 3D printer, which is a deductible, but not all at once in some countries. Some purchases get spread over several years because the printer keeps working for you long after you bought it. In Canada, you write off roughly 50% of the remaining value each year. The US lets you deduct the whole thing in year 1 under Section 179. The UK has something similar called the Annual Investment Allowance. Now, let's look at this example. Say you purchase a Bamboo X1 Carbon, which costs you around $1,500. In Canada, year 1 might be around $375, year 2 around $560, and this continues until you recover or recoup the $1,500 spent for your printer. In the US, that full $1,500 could be gone from your taxable income on day 1. And I think that's somehow a little bit more beneficial where you can have those savings right away. Now let's move over to things that you use on a daily basis to sustain your business, such as your Filament, your home office, phone, or even software. Filament, which is like PLA, PETG, or TPU, are the core materials of your trade, and it's fully deductible, dollar for dollar. But just remember to keep your receipts. Make sure that you're having it stored so that you can prove that this is how you actually went about purchasing your items for your business and the actual cost. Another thing to not forget about is your workspace. That also counts. If your print area is 10% of your home square footage, you can deduct 10% of rent, electricity, internet, and home insurance, plus other things that are associated with your dwelling. If you have a mortgage instead of rent, here's the key detail you need to focus on. You can't deduct your monthly, and I repeat, you cannot deduct your monthly mortgage payment, but you can deduct 10% of the interest portion, not the principal, just the interest. And same goes for property tax, where 10% of that is also a deductible. The US has a much simpler system, a flat $5 per square foot shortcut, and that's up to 300 square feet. Or you can deduct the business percentage of mortgage interest and property tax directly. The UK uses a flat weekly rate based on hours worked from home. And I think these systems are much simpler than the one used in Canada. Now, phones are also a key component of our business. Claim the business percentage, which accounts for calls to clients and suppliers, or have a dedicated number which is strictly for your business. This way, it is much easier to track and record in terms of all calls made for your business. Now, software is also a key component. Your CAD tools, your website, your accounting software, business insurance, also your subscription to like Shopify, Motion Array, among other things. Anything that you utilize to sustain your business is very important to have deducted, and this can amass to huge savings at the end of the financial year. So if you have a vehicle and you utilize this for your business, and similar to your dwelling, if you're driving to deliver prints, pick up filament, or meet a client, that's business mileage and you can claim it. The simplest way is the flat rate. In Canada, it's 72 cents per kilometer for the first 5,000 kilometers, then 66 cents thereafter. The US is around 67 cents per mile, while the UK is 45 pence per mile. But the key thing to do is log the date, the destination, and the reason for every trip. This makes it easier for you to have or to make an account of what you do for your private or your business related travels. Now here's the part people may be concerned about. What about your monthly vehicle payment? The answer is dependent on whether you lease or finance your vehicle. If you lease your vehicle, your monthly lease payments are deductible. In Canada, it's up to $1,100 a month before tax, and this is based on your business use percentage. If you finance the vehicle, meaning you took out a car loan, you don't deduct the loan payment itself. Instead, you deduct two separate things. One being depreciation of the vehicle's value over time, called capital cost allowance, and the second would be the interest portion of your loan payments, and this is capped at $350 a month in Canada. Fuel, insurance, maintenance, and repairs are all deductible too, and this is at your business use percentage with no cap. So if you're financing your vehicle and using it for deliveries, don't ignore it. Between depreciation, loan interest, insurance, and fuel, that adds up pretty fast over time. Just track your business kilometers versus your total kilometers, because that ratio determines how much of each expense you're allowed to claim. Now, if you travel a lot for your business and say you're heading to a maker fair, a trade show, or a supplier visit out of town, then flights, hotel, and transport are deductible. Meals on the trip are 50% deductible in Canada and the US, and the trip needs to be primarily for business. If you stay an extra day for yourself, that day's hotel and meals aren't deductible, but the business portion still is. Keep your receipts and a short note on what the trip was for, and this is very important so that you can provide that information if you're audited by the tax authorities. Now, the gear we already own is the one most makers leave on the table. But say you bought a camera and multiple lenses before you ever called this a business. You can still include this in your operation. Declare what it's worth today, not what you paid years ago, and start depreciation or depreciating from there. Cameras, lenses, mics, lights, don't leave them outside the business for no reason. They're part of the operation. Therefore, it's important that you include this in terms of their actual value and depreciation value over a period of time so that you can save on your taxes. Overall, the government isn't taxing your revenue. It's taxing your profit. Your job is just documenting the real cost of running a business. Printers, filament, your workspace, your vehicle, your gear. This isn't a loophole or some kind of hack or something illegal. This is the system working exactly as intended for business owners. And if you have never tracked your expenses before, start today. One folder, one photo of every receipt is all you need to do, and you will be shocked how much smaller that tax bill gets over time. So, I'm curious as to what surprised you most about the information presented. Is it about the vehicle or mortgage interest? Whichever one it works out to be, drop your answers in the comments. And if this somehow offered some insight and save you money, consider subscribing. This helps me to keep making these videos, and it's actually for free. Anyhow, I'll see you on the next one, and thank you very much for watching. By the way, my name is Dwayne. I'll see you.